The XLK technology ETF is currently logging one of its longest winning streaks in history here in early December 2025. So the obvious question is, what comes after this streak ends? We have a host of charts to go through for the XLK, specifically for technology stocks today, which will be our focus. Make sure you stick around to the end because we're going to reveal an aspect of this which hasn't been talked about yet. So as of the close on Monday, December 8th, that streak is now at 11 consecutive advances. So what do we know about that? Well, there's one fact that no one can argue. It is going to end, and probably very soon. And so with that in mind, let's see what it looks like on the chart here. Of course, we know it started after the market looked like it was about to roll over. This looked like a huge top along with many other indices. We looked at it, of course, from the S&P 500 perspective recently. And really anything you looked at that was related to growth at the time, it appeared that it could get much worse. And as we've seen so many times now over the last number of months, just when a top was about to break lower, that's when a bid came in. And obviously it has happened in an extreme fashion here within technology with, again, that first advance happening on Friday, November 21st, and extending all the way until right now. And so it also came after a big pullback of almost 12%. And so that nearly got that 14-day RSI down to oversold. Didn't quite get there, but as we can tell, it was by far the lowest reading we had since the crash lows in April. So it had a long way to go, and we're still not back, of course, to overbought conditions, and we're still not back to new all-time highs just yet. But we couldn't expect anything more at this point. It hasn't even logged a decline. So the longest streak it's had, and the last time this has happened, was in February 2017, when we had 13 in a row. And what do we know about 2017? It was a great year, and it was a very consistent up year for just about any equity-related index or ETF, XLK included. And so the most important part about this is really what came right after. And so again, this is 13 straight up days. As we can tell, it wasn't just the only winning streak either during that time frame. And we know that things really changed in November after the presidential election in 2016. And then we just saw a very big appetite for stocks overall. And so again, that seemed to culminate at the time in February, but it didn't. We know that this led to some consolidation, which of course is the best case scenario after a strong, consistent run like that. In fact, we had about 2 months worth of consolidation, which then led to the next up leg, which lasted another few months. We had another minor pullback, and then off we went all the way into the beginning stages of 2018. And again, we've talked about this in the past. From late 2016 to early 2018, it was the least volatile uptrend we've seen in history, with the calendar year 2017 actually taking that title away from 1995. So regardless, what does it tell us? Well, it tells us that at least in this particular sample, that after a long winning streak ends, it doesn't mean that the long-term uptrend needs to end, right? And we've seen that before in the past where, we've heard the term strength begets strength. And the other thing is that you just don't see long winning streaks in bear markets, or you don't see a bear market rally like this, right? And so it's all about what comes after this going forward. It's another way of looking at it is to judge how strong this 11-day run was. We know it's been consistent in historic fashion, but over those 11 days, up about 8.5%, which is a strong amount. I mean, we analyzed that out. It's a huge number, but in terms of bursts of strong buying in the past, it doesn't really come close to anything we've seen, even going back to just 2022, right? Some huge bear market rallies in there, which lasted over 10 days, and even in 2023, 24, and of course, near the lows in 2025. And so we can frame this two different ways. Again, rare in terms of the length of the streak, but if we measure this from a rate of change perspective, it's a good run, but nothing close to historic. So we're saying that this can't continue. The market needs to roll over completely because it's come way too far, too fast. I would say that is not the case. There's another very important piece to this, which again, we're going to look at the end, which makes this all make a lot of sense. So if you're enjoying this content, I urge you to check out our free Substack newsletter called Cap Notes, where you can read about the XLK's winning streak in much more detail, along with deep dives into the S&P 500, many other ETFs and 2 fresh trade ideas just released today. And if you sign up today, you'll receive our 6-step trading process that powers winning chart trades and limits losses. This is a simple, proven framework for spotting high probability setups. Again, it's capnotes.substack.com. Look forward to seeing you there. And so, when was the last time we had a strong run like this off the lows? Of course, was 2020. And we talked about it at the time. I think it's very important to consider that perspective or that time frame again now. And so, needless to say, XLK was down about 30% from the February high there to the April low, and that was just a touch better than the nearly 34% decline that we had during COVID, right? So just a huge crashes both times. You remember, it wasn't just XLK we were talking about. The market endured such a huge amount of pain in a short amount of time that we had to go all the way back to 2020 for nearly every metric that we looked at back then. And so it makes sense to judge the advance that has happened since that time on a comparable basis to that time frame as well. And so along the way, we saw a huge rally, of course, and really with the XLK gaining almost 90% until it had its first real bout of digestion here in September and October. So the same type of thing here, not quite as strong of a move, but up nearly 80% through the last high just a few weeks ago. And so what happened here? That's when the S&P had consecutive corrections, and of course, XLK did as well. Down 15%, strong rally, then down 12% once more. And most recently, you probably know, the XLK also endured a correction of 12%. Very similar to that. Of course, we only had one so far, but this was, 2 months worth of back and forth movement. And even though this was only 12% so far, it was the same type of two-way volatility since October 27th, so about 6 weeks worth of that time frame. And the important thing, of course, was that we know, in hindsight, that this did not stop the uptrend. In fact, XLK was up a total of 161% by the time it got to the end of 2021. And so that was a little less than double the amount that it was already up to the first time that it had that correction in September of 2020. And so right now, again, is history going to repeat itself exactly? No. But we have these patterns and behaviors in recent history to at least give us an idea of what is possible. And really, anything is possible. The market could drop an extraordinary amount in a very short amount of time once more, or we can see this continue higher from here, even though it doesn't seem likely based on how far it's come so far. And so, again, let's look at this from a longer term point of view as well, because we can't just judge this winning streak in a vacuum. And so this came after, again, a very strong 2-month gain. We just talked about how the last time we saw a strong move from crash lows was 2020. But if you look at this closely, this was a 2-month gain of about 20% off of the lows. And that has only happened 2 prior times going back to 2003. That was, of course, COVID, and then right after the great financial crisis. Think about how much we've gone through over 2 decades worth, and it only happened 2 other times. Now, it happened a lot more here, as we mentioned. XLK came into existence in just as 1999 began. So if we were to pull this all the way back to 1995, I'm sure we've seen a lot more instances of 20% 2-month runs. But right now, we're looking at the data for what we have. And that is this, is that we've only had 2 prior instances here, again, from this point. And what happened? They came after extreme downturns over the course of a number of months, over a year, of course, the great financial crisis, the COVID low, and then the tariff tantrum that just happened from February to April. And needless to say, we saw strong follow through, which lasted years, over a decade, of course, for what happened after the great financial crisis, then again after COVID, and now trying to replicate those instances once more. So as we can tell, this time we have 2022 included. That was a bear market, but as we can tell, if we look at this and we zoom all the way back, right, that looks like a downturn or a mean reversion within a much longer uptrend, right? And so could we have a bigger pullback at this point? Of course, this still shows that we could look at this big downturn, this crash, as a new starting point for the next up leg if something like this is going to be replicated once more. Again, one perspective that we should not discount. And so now looking at the go-no-go charts from a daily perspective, and we'll look at weekly as well. This is an important one to watch over the next few days. Again, we're going back now to the shorter term. And so this is the go-no-go chart on the daily perspective. And needless to say, since May, just like the S&P 500, it's been in go mode or in a bullish trend since that point. But as the market was pulling back again, as XLK was losing over 12% from its peak to its trough, that go-no-go trend flipped, right? Initially to amber, which is neutral, as we've talked about a lot with the S&P 500, and then the full bearish trend, which just only flipped back to at the beginning of last week. And still, as of right now, again, at the end of Monday, December 8th, it still hasn't flipped back to bullish just yet. So still waiting for those indicators, momentum trackers to eventually turn once more. And so that could be frustrating, thinking that we got whipsawed here. But again, we go back to what happened in 2024 as a most recent example, where again, XLK was coming off a strong turn in early November, late October, rallying. And then that first pullback that was meaningful happened again the same time frame in April and triggered what was a very strong trend, had that character change. That character change from a go-no-go perspective resulted in this flipping to no-go. Now, again, we saw that happen in April. It lasted up until the second half of May before it flipped back. And so this was kind of in line, didn't lose much because you basically got back in if you were paying attention to this. Right at the same levels, but of course the trend had then reversed higher, and then we were off to the races for another few months. And again, this is what it looks like here. And potentially this could flip back at some point soon. But the hope from this perspective is that it once again captures the triggering of momentum that could take us back to new highs and beyond. And so looking at from a weekly perspective, again, if we use this pullback or this crash as another starting point, we're only about 20 or so weeks into having a weekly bullish trend. And if you go back to what happened here, right after the 2022 bear market finally turned to bullish in early 2023, and of course lasted all the way into early 2025. So 2 years. And we also can look at this again from the COVID low, where it triggered a few weeks after the low and lasted all the way until the end of 2021. So again, 2 years. We're just about 6 months into this right now. And so, of course, from this perspective as well, could suggest that this is just a pause within a longer term uptrend, with this long winning streak being part of that comeback. And so the next step, again, looking at this from a daily perspective, is what? Well, quite simply, to get this RSI back to 70 overbought territory, which could coincide with the XLK then making a new all-time high. Again, how much more can we expect after 11 straight up days? Well, a good amount more, because again, this is a good move. We just talked about how it's maybe was explosive at the beginning stages, but 8.5% over 11 days doesn't come close to the strong moves we've seen, again, just over the last 2.5 years, not even counting what's happened before that. And so if that were to occur eventually, that would just tell us what? That it's back to the behavior that we saw before this 12% pullback, where rallies took this RSI up to the 70 threshold, pulled back, and then repeating the process over and over again. Higher highs, higher lows, and then seeing that RSI again just routinely get back up to overbought territory tells us that momentum remained strong and on the side of the bulls. And so, seeing that happen obviously be a positive. Will be a negative if this just gets completely faded and we don't have a higher high, and coming off again an area where, or a time when the RSI almost hit 30, if that just then fails to get back to overbought again, it would tell us maybe this was just a knee-jerk reaction, and that there's going to be sellers coming in with reckless abandon once more. So those are the things we're looking for. Now, we have to look beyond the XLK. If we're talking about technology overall, XLK is getting the focus because of the long winning streak, but there's obviously many more stocks besides just the big ones that we think about when we hear large cap tech, large cap growth. And so here's a comparison, again, from that low when things started to rally on November 21st of the XLK, again, up about 8.5% from that time frame, versus the equal weight tech sector, which is RSPT, up 11% or 3% more. And then you have the PSCT, small cap tech ETF, up 15% over that time frame. So nearly double the amount the XLK has done. And so we talk about, again, the 11-day winning streak, only of these three, only XLK has had that. But these other two, showing that the performance was even better from stocks maybe that we don't hear about as much, gives us an idea that this just is not about large cap, mega cap growth, mega cap tech leading. It's not about that at all, in fact. It has been a very strong rebound effort for technology overall. Large caps, obviously, mid cap, small caps doing even better. And so in terms of breadth, this is what you want to see, especially with the biggest sector that there is. And so RSP has actually got all the way back to its last high quite quickly. You remember, if you're looking at the XLK, it's only about right here as a comparison and much closer so far to getting back to the 70 overbought threshold as well. And if you look into what's moving this, you can look at Koifin.com, does a great job of giving us a sense of the holdings and what they contribute. And so if you look back over the last month overall, these 12 stocks are contributing the most to the RSPT's gain. And so some of them we know about. Apple did, of course, very well, but not recently. It's pulled back 4 or 5 days, even as XLK has continued. Now, how has that happened? Because stocks like ADI, Synopsys, SNPS, Apple 11, APP, AMAT, some that we know, some that we don't think maybe are doing that, have been doing the heavy lifting. And that's, again, what you want to see, where you can pass the baton of leadership within the sector when the biggest names sometimes are struggling. Not even talking about what Microsoft has done, which is not much at all over the last few weeks. And so this is what the PSCT, again, Invesco S&P small cap technology ETF, not quite at new highs, but again, closer than the XLK was during that time frame. And PSCT's leading stocks over the last number of weeks are probably not as identifiable to most people unless you traffic in these names. MXL, DGII, KLIC. You can tell how strong these moves have been from the lows. And so we talk about all the time how, the biggest names get all the attention and they drive so much of the market activity, but there are dozens, hundreds underneath the surface at all times that are doing better. And sometimes we have to go beyond the headlines, of course, to understand exactly what's going on. So whether this winning streak for the XLK extends or not, it's really a matter of what comes after, which is going to dictate how well it does. And again, it's not just XLK. It's all these other technology names underneath the surface within the S&P 500 itself, within the small caps, within mid caps, that's going to give us an idea of how well the market can continue through the end of the year and, of course, into 2026. So that's what we have for today. Before you go, don't forget to check out our last two videos here.